Okay, good afternoon, ladies and gentlemen. It's good to be here. Happy New Year to all of you. And hopefully this is a year where everybody can get a lot more investment returns from the market. Today my topic is about Magnificent Seven. Just to make sure that you know this topic, right? How many of you actually know what are the companies in Magnificent Seven? If you do, please raise your hands. Oh, so only half of you. The other half just come in. I don't know what a Magnificent Seven is. Please tell me. Okay. So this Magnificent Seven is probably the biggest company, not just in the US but in the world. We are talking about $1 trillion market cap. Do you know Apple alone is bigger than the entire Singapore stock market? Right. That's how big these companies are. So Apple is the first company that has reached $3 trillion market cap. And second is Microsoft with 2.78 trillion. That's as of last week. That was where I screenshot. So it might fluctuate a bit if you check it today. And skipping Saudi Aramco, then you will see the other four: Alphabet, Amazon, NVIDIA, Meta Platforms, and Tesla. These are the seven that forms the Magnificent Seven, so to say. Okay, so they are all close to, only two are not $1 trillion yet, Meta and Tesla, but they have been $1 trillion before. So there will still be room for growth for some of these companies. And looking at this Magnificent Seven, they also have a very big influence of the S&P 500. As you know, for those who invest in US, you have known this index is a very popular one to track how the US stock market is doing. And in this index, you realize that more than 25% of the index is driven by these seven stocks. So that is the influence that these seven stocks will have on the overall US market. As we can see in 2023, the US market did very well is largely due to this Magnificent Seven, not because of all 500 stocks in the S&P 500. If we look at this performance, this is taken as of 1st December 2023 when I was preparing the slides. So it's first 11 months of 2023. And you can see the returns are pretty fantastic. This is less than a year. You have NVIDIA up 226%, Meta up 160%, Tesla up 121%. And even Google, Alphabet was the least returning Magnificent Seven, was returning 48%. The entire S&P 500 at that point in time was 21% return only. So you can see it is the Magnificent Seven that was pulling up all the entire US stock market. And that is how influential and big they have become. And I will next delve into the individual stocks because I have limited time. So I will mention the key points that you should take note of, whether they are good or bad in the coming 2024, so that you can have a more informed decision how you want to invest or hold on to these kind of companies going forward. So for Apple, let's start with the first one. It didn't have a good year in terms of fundamentals because revenue has declined from a year ago. Whether is it iPhone, Mac, iPad, wearables, all went down. Hardware, products, revenue all went down, except services was up by 9%. And this is not a big concern because usually this kind of hardware sales is very cyclical, right? You don't change your phone every year. In fact, now most people change their phone maybe once every 3 years. Last time used to be once every 2 years. Now probably lengthened a little bit. Hence that demand is an off-cycle kind of demand in 2023. But in 2024, it's expected to go up. Not just for Apple, but the rest of the hardware companies, even like Lenovo, Xiaomi, all this kind of hardware, consumer electronics. And of course, the highlight services. This is going to be a very steady growth for Apple going to the next 10, 20 years, right? Because Apple is an ecosystem play. They don't just sell you the hardware, but they will sell you their subscription, their software. And they have all the kinds of subscription that other companies are doing it just by itself, right? So for example, Apple has Apple Pay, Apple Card, Apple Pay Later, which is a loan, consumer loan kind of a service. So you can say that eventually Apple can become a bank by itself, right? That's how big it become. And music, yes, Apple Music, yes, started with iTunes, the concept of it. But now because of Spotify, they also went into just a one price. You subscribe, you get endless streaming of music. And they have Apple TV to compete with Netflix. They have games, right? You play a lot of games on mobile phone as well. Now they are very big into fitness. Right, they have the wearables like your watch to tell you your heart rate. They tell you a lot of all this fitness stuff. And they also have fitness classes like what Peloton is doing. and they also have cloud storage like iCloud. So you can see they have almost everything. And if you combine the revenue of all these services together, they are more than the individual companies like MasterCard, Netflix, Spotify, EA Sports games added together. So that's how powerful Apple services have become. So it's an ecosystem that they trap users into it, and hence you don't just buy the hardware, you also buy the software. And this is another advantage that they do. So instead of selling you separate accounts, right, you subscribe to Netflix, Spotify, or so many apps, so many accounts, so troublesome. So what they do is that they bundle and price it lower than if you would have paying for individual service by itself. So that's how they do the bundling strategy to boost their sales further. Right? So Apple is very smart at all this kind of business aspect as well. So their services is going to be a very strong growth driver. And in terms of hardware, you can expect that Apple Vision Pro is going to be launched early 2024. So within this quarter or the next quarter, you will see this. Right? Of course, people are asking whether is it too early. Meta platforms that came out with their VR goggles, it didn't really sell very well. Right? I believe most of you won't have one. And yet, Apple is coming out with this. It is not true that Apple has never failed in their hardware products launches before. They have, especially in the earlier days. But we can also say that Apple hardware has always been more tip-top compared to competitors in terms of quality and design. So if someone is going to make VR goggles work, right, it's probably going to be Apple. Okay, so it is something that we should see and watch for the next few quarters. Apple has the biggest advantage is because of its brand and very strong loyalty. Right? When they launch a new iPhone, you can see people queuing there overnight. And that has never changed year in, year out. So that's how powerful it has become. Next, let's move to Microsoft. And Microsoft's story, of course, is artificial intelligence because of their big investment in OpenAI, which owns ChatGPT. And I believe most of you probably would have used it at one point in time, and probably even more regularly now. And Microsoft's stake is more than 50% in OpenAI, so it's a controlling stake, and which means that they are the best positioned as the sexiest AI company that people are looking at the moment. So they gain a lot of this AI cloud in 2023. And the other aspect is not just AI, but also gaming, because Microsoft has Xbox, and they have their own ecosystem as well. So previously, they were ranked 4th in terms of gaming revenue in the world. But if you recall, last month, they have completed the acquisition of Activision Blizzard, which is ranked 7th. So if you add 4 and 7 together, their total revenue would have pushed Microsoft to 2nd place. So Microsoft have become the 2nd largest gaming company in the world after Tencent. And Microsoft also got a third thing going for them, which is the cloud, right? Azure. So Microsoft currently is the 2nd largest cloud infrastructure company after Amazon, and they have caught up quite fast over the years. And out of so many business segments, cloud revenue is the fastest revenue driver, or fastest revenue grower for Microsoft. Okay, so you can take a look. You can take a picture if you want, right? You can take a look. Or I took this from CNBC. Okay, so market share is at 25%. Amazon is at 31%. And the last thing about Microsoft that I like is that unlike the other big tech, they are usually focused on one particular item. Like for example, more than 50% of the revenue for Apple is driven by iPhones, right? Majority of Alphabet and Meta's revenue is advertising. But if you take a look at Microsoft, they don't have one very obvious core driver. Of course, you can say it's the cloud, but you can also say that it's about one third, right? About there, okay? So they are the most diversified big tech company or Magnificent Seven company among the rest. Next, let's move to Alphabet, which owns Google. Of course, Google had a scare because the OpenAI launched ChatGPT and it became very popular. So people were wondering, right, when Bing, which is Microsoft's search engine, right, added this ChatGPT inside, would it steal market share from Google search? Okay, so let me do a poll. How many of you use Google search today? Okay, good. All right, so that's why Google search had not lost its dominance. It is still having more than 90% of the search market share as of even today. Okay, so that is how powerful the mode of Google search is. And Bing didn't really increase. It increased a little bit, but it's still at about 3.2% of the search market share. So ChatGPT didn't help Bing that much. So Google could breathe a sigh of relief from here. And although people will say that, well, Microsoft seems to be leading in the AI game, but Google has a secret weapon. Okay, secret weapon in the sense that they should not just focus on Bard, right? Bard is another ChatGPT replica. Just today, they were going to announce that Bard may have a paid version, just like ChatGPT. But I don't think that is the way that they should go. But they should focus on the very personalized digital assistant. Right, so now everybody can have secretary. Not only the bosses can have secretary. Okay, Google will be your secretary. And why? Because Google knows everything about you. Google knows who you talk to, right? Who you email, where you go because you use Google Map, right? What time do you meet because you use Google Calendar. So it can create a very powerful AI digital assistant for everybody. So that is actually the big win that this publication Stratechery was saying, and I agree with it. Amazon, right? So Amazon, of course, we know that they are an e-commerce player, but the surprising thing is that the biggest revenue driver for Amazon now is not e-commerce, okay? In terms of growth, revenue growth, is coming from advertising. Okay, just like how Meta and Google has been monetizing their advertisements, Amazon has also done that. And now Amazon's advertising revenue is higher than YouTube's advertising revenue. Okay, why? Because there are third-party sellers on Amazon platform, and they will need to buy advertisement spots in order to place their product higher in your search results when you use Amazon. So that's how Amazon captured this advertising money. And also they went on to sports streaming, and that's where advertising dollars are made as well. Okay, so Amazon, biggest growth driver currently is actually advertising. In terms of cloud, which is the main profit driver for Amazon, they are just maintaining market share. Their growth rate has slowed down together with the rest. They are just maintaining a market share about 32%, while Microsoft and Google are catching up in terms of that. So that is something that is just a cash cow for them. It is not a growth driver for Amazon as much as before. And e-commerce-wise, they have challenges, right? We saw Temu went over to US. Okay, so for Amazon, for your information, they are very strong in US and Europe, not in Asia, right? So in US and Europe, they are the kings. And however, in the last 1 year, we saw Temu, which is 𝗵多多's subsidiary, international arm, has managed to gain a traction in the US in terms of app download and sales. And Shein as well. So how many of you actually have bought things from Shein? No, a few, okay. Not so popular. How about TikTok Shop? Don't have. Okay, only my wife 𝗓𝘃𝗀𝘀. Okay, so I can see the impact of in competition, right? So you have 3 new challenges, right? Shein, Temu, and TikTok Shop just announced that they are targeting $17 billion revenue in 2024, which is US revenue. So they are trying to take Amazon's market share. So for the longest time, Amazon has been safe in US, but going forward, the same cannot be said anymore. And Amazon is reacting because they're saying that below, I think about $20, they waive some of the fees so as to attract the sellers to come back. So these are the considerations that you might want to have. For NVIDIA, of course, is the AI story. It's the best performing Magnificent 7 in 2023. And a lot of people still like the stock. It really pushed itself to fame. And it is still going to dominate the AI space in terms of the hardware, because the best hardware for AI, right, which is the graphics card, or they call it the GPU, graphics processing unit, you need that to process or AI application. The best still comes from NVIDIA. AMD is not there yet, right? Even for the next 2 years, AMD themselves even acknowledge they will never catch up with NVIDIA. So NVIDIA is going to be quite in a pole position for the next, at least the next 2 years. And you can see that revenue jump a lot, okay? For example, in the last 2 years, right, the AI sales have jumped 345%, okay? Tripled in just last 2 years. And it is likely to continue to remain hot for the coming years since there is no competition. And there's more development for NVIDIA because NVIDIA now also wants to be a cloud player. It launched the DGX Cloud, and that means that you don't need to buy my graphics card. I will rent you the servers. You just pay me a fee, right? Just like how Amazon Web Services, Azure does it, and which means this is in competition directly with the 3 biggest cloud players that we are talking about. So they are like on one hand, they are customers. On the other hand, they are also competitors. Okay, so it is not a very friendly place because even the big tech companies, they also want to be less reliant on this NVIDIA. They have started to build their AI chips. Amazon has Trainium 2 and Gravitron, and Microsoft has Maya 100, and Google has their Tensor processing unit. So everybody is trying to eat into everybody's turf. And within the Magnificent Seven, there are actually a lot of competition that you don't see. Okay, so that's what's going on in the background. And this is Meta. Meta had a very bad 2022, but 2023 it was fantastic. So Mark Zuckerberg at the start of the year said it is a year of efficiency, right? So he fired a lot of people, talked less about metaverse spending, which the investors really didn't like, and they bring back the revenue, advertising revenue, hit a record high, as well as record profits by 3Q 2023. Okay, so they have reversed all the bad things that happened in 2022, and hence their share price has gone up 100%. But for Meta, they still don't have a core revenue driver that is obvious to me at least, right? They are still relying on advertising revenue. Okay, they don't really have a new product in the pipeline. Metaverse is still too early to talk about. For Tesla, is Cybertruck, right? It's on sale now after a series of troubled manufacturing, and the manufacturing cost actually increased or doubled from the 2019 estimate. So it has doubled from 4 years ago, and hence there's a lot of issues with this manufacturing. We won't know whether they can fulfill their delivery eventually, but they expect that, Elon Musk himself expect that 250,000 Cybertruck is going to be delivered eventually. So that's about 15 billion revenue, right? Or 20% of its current automotive revenue. But Tesla has a lot of competition. You have read in the news, BYD have just overtaken Tesla to be the biggest EV company in the world, right? And it is not just BYD, you have a lot coming in. You got Xiaomi, you got Huawei also do cars, and even the Apple car is not really so soon, but eventually it can happen as well, okay? And this is also shown in Tesla's margin is going down, right? Because there's a price war going on. Everybody is slashing prices to sell more cars, right? Because when one slash, the rest will slash. And it depends on how much every car company can slash. Tesla and BYD has advantage because they are profitable, but majority of the others are not. So they have less to fight with these top two companies. So this is the summary, all right? The very quick one. I just put in a table for you. If for Apple, we talk about growth drivers are likely to be services. Apple Vision Pro is a surprise, right? We won't know yet, but potentially can be. Watch areas is geopolitical issues in supply chain. I didn't mention about this, but probably quickly I'll go through is that because you know that a lot of the Apple products are produced in China, and US and China is not in the best terms, and Apple is trying to move the manufacturing out into India or even Vietnam, but you can see that China retaliated, right, by banning Apple iPhones in government places. So there's a lot of geopolitical tension that Tim Cook will need to iron out, right? So he's no longer just an entrepreneur, he's going to be a statesman, right, to manage geopolitical issues. I need to increase his pay. Second, Microsoft growth driver is Azure Cloud and their AI products. They just launched the key, right? The AI key is going to be on your keyboard if you buy a new computer now. Watch areas none because they are pretty well diversified. Alphabet growth driver is Google Cloud and AI Assistant. Watch area is whether consumer behavior will change, that you'll start to use ChatGPT to search rather than using Google search, okay? Amazon advertising revenue is the growth. Watch area is the emerging competition for US e-commerce from Shein, Temu, and add in one more is TikTok Shop. NVIDIA growth driver, GPU demand for AI is going to increase. DGX cloud service might add a more consistent recurring revenue for them. And watch area is cloud players wants to be less dependent on them and want to do their own AI chips. Meta, no growth drivers. Metaverse development is going to cost more, and rise of TikTok is going to steal eyeballs from them as well. Lastly, Tesla growth driver is Cybertruck, but at the same time, they face a lot of intense competition from their competitors. Okay, so if you want more details, actually I did a guide what I have discussed. You can go and download it if you want to. Okay, my time is up. Thank you very much.